3. 3 at 3 is where I bring you unusual option activity. If you decide to do anything with it, you're welcome. And if you don't, and it's just for your edification, that's fine too. Which brings me to the start of our presentation and, of course, as usual, the disclaimer. So, again, 3 at 3 for the 13th of August, and I am John Najarian. The disclaimer says that this is for educational and informational purposes only. Full stop. Intellectual property rights, yes. HeatSeeker is an algorithm that we have trademarked, patented, and register marked, as well as other parts of this presentation. Please ask us before you use any of it, and cite us in the use of this. Thank you. Yesterday I spoke about Microsoft when it was under 107, and I spoke about it because we saw 23,000, which is 2.3 million share equivalent of the August 210 calls trading. Now, note the 14 ahead of the August expression there on the screen. The 14 indicates that those are options that expire on the 14th, which is tomorrow. Yesterday, that was 2 days hence. Today, just one. I know you guys get this. I just want to drill it into you that this is extreme theta, time decay, deep end of the pool. Very rapid time decay means you got to be willing to move quickly, either to cut losses and move on, or to take profits and move on. So, let me show you what happened today. There is, on the left side of your screen, what Microsoft did on the opening. This is Central Time. Microsoft opened at 8:30 for the first trade, and the first 3 lot printed at approximately $1.60. And as you see on the screen, $1.54, $1.57, $1.55, just in the first few seconds of trading. Many of those quite small trades, but in rough terms, this is what Microsoft did on the opening. Let's call it $1.60. I can't remember for sure where I was in, if I was in at $1.45 or wherever. But anyway, I did not sell there. However, as you note here, just minutes later, Microsoft exploded to 211.26, which made those 210 calls in the money, ITM, in the money. So, again, you have a very short period of time to do something with these, or they vanish, disappear. Now, they could be deep in the money. Microsoft could end up being 215 or whatever, but that's not the way I trade. That's not the way I trade. That's not the way we try to manage things when we're talking about 3 at 3. We're looking for unusual option activity. Let's stick and move, stick and move. So, especially with times that are this short, we need to hit it and then move on to the next trade. So, stock pops to a little over 240. I have a better, in the neighborhood of $1 profit on there. And I took my profits as the stock started pulling back. I just exited the rest. So I have no more option positions in Microsoft, but it still is my second largest stock position, Microsoft, and now I've written calls against it. So that is an update from yesterday. Let's take a look at Penn Gaming, because we talked about Penn Gaming just 2 days ago, which was the 11th of August. And with the Penn on the 11th, it was a $49 stock. And they bought, again, 14 ahead of August, tells you that those are options that expire tomorrow, the 50 calls. This is why when Scott asked me about it on the show, and I knew that I think it was Goldman had put out a very positive note on it. I'm happy for that, and I love the long-term prospects, but the options that I'm trading in the case of the top one that you see there, the 14th of August 50 calls that I bought for a little over $1, I think average price $1.10, $1.15, those calls would expire tomorrow. So I had to trade out of those today. I still have the other ones from the 17th of July when the stock was $33, and I have been, nursing these along with a spread. those August 50s that expire next week. Note that it doesn't have a 14 ahead of it. That just says August 50. So I traded out of the top, and I'm completely out of these. They made a heck of a move. There you see the regular August, this week August 50s traded as high as 370 earlier today, and I sold half of those, and then just after halftime I was aggressively selling out these 53 calls against the 50s. What does that do? Puts me into a call spread. I take another few shekels off the table because the stock was, I think, 53.20 or so, and I was getting $1.24 for the 53 calls. So in other words, $1 worth of premium. I sell those against the ones that I paid yesterday, that I bought yesterday, and I'm like, thank you very much. So in other words, I traded into half of this for a call spread that will expire tomorrow. If the stock's 53 or higher, the spread goes to $3, and I get all of that premium that I collected out of those 53s, because of course that all just turns into either intrinsic in the money or it vanishes completely, and I sold those, the 53s, so I'm kind of happy about that. All right, let's take a look at how you could get started. If you'd like to get started, you can go to marketrebellion.com/get started. You can learn stock, options, futures, cryptocurrency over at marketrebellion.com/get started. We've got remote learning, so you could open up your laptop, your iPad, your phone, and take a look at any of these lessons online any time of the day or night, and just progress through and see which, how active a trader do you want to be, how many different strategies do you want to learn. You can learn all of it at marketrebellion.com/get started. Now, drum roll, the first of our 3 at 3 fresh meat today is PayPal, PYPL. This is also going to be a learning experience because I'm going to show you why I did what I did. As you see, September 210 calls were approximately $3. But think about that, folks. Those calls are basically $18 and call it 40 cents out of the money. That's a lot. Now, PayPal's completely capable. As I said, I traded this one well until I exited at about 170 or so. And now the stock is $20 higher than that. So shame on me. But again, options led me in. I followed them. And then when I didn't have any other catalysts, I exited PayPal because I had what I think is a great competitor, Square, as far as their cash app. PayPal, of course, has Venmo. So anyway, they were buying these 210 calls, paying $3. So what I looked at doing was buying the 200 calls and selling the 210 calls. Now, why would I do that? Well, because they don't have strikes every $5 in here. They have them every 10. This was my best opportunity, I thought, because I could pay $5, or even, like you see on your screen, $5.55. That was a screenshot about where they were trading. You see the volume. 1,600 have traded so far today. They've been between 520 and 667. That is the screen on the left. The screen on the right shows you that those 210 calls I was able to sell for $3. And they still are basically $3, offered at $305. And they have traded as high as $384. And you see the 13,000 contracts that changed hands earlier today. It was 5,500. So 13,000 of these. I like what I've got here because I've got $2.50 on the table. Why 2.5? Because if I paid $5.50 and I sold them at $3, that's $2.50, the differential. That's all I can lose. Not $5.55 and not $3. I could only lose $2.50. So that's one thing that's moved the odds into our favor. The second thing that moves the odds into our favor is we have addressed time decay. It starts getting very fierce in the final 60 days of an option's life. How many days do we have till expiration here? Well, let's see. We're into the second week of August. So we've got the 14th and the 28th expirations in August coming up. And then we've got 3 more weeks in September. So call it 5.5 weeks if you want until expiration. 5 times 7, 35, 40 days. This is the heavy part of time decay where it just starts crushing on you. So how do we address theta? By selling these 210s against the 200s. I address time decay. I've also addressed Vega, V, which is volatility, because if volatility compresses here, this could hurt this also. Just if you have a simulator at home, do that. Type it in and say, okay, what if we took the vol down to 30 from 38? What do you think happens? They shrink. So if you want to address both time decay and volatility, one way to do that is a simple 1-to-1 call vertical spread or bull call spread, whatever you want to call it. And that's why I show you this one here and say it's a bit of a teaching moment. So keep an eye on PayPal, realizing that we have $2.50 on the table for something that if PayPal goes to 210 or higher, this spread goes to $10, and we just tripled our money because we took $2.50, turned it into $10. That would be a great trade. Obviously, if you just own these naked and it goes way past 210 and goes to 220, you could have done pretty well too, but not as well as me. Because think of it, if it goes to 220 and you paid $3 for the 210s, how much did you make? 7 profit. If it goes to 210 and I've got 250 on the table, how much do I make? 750. So if you buy these naked, stock has to run past 220. And again, this is a $190 stock. So I think I've moved the odds into my favor. And for those of you who follow along with me, we've moved them into your favor too. Let's take a look at our second trade of our 3 at 3. Bank America, one of Warren Buffett's favorite stocks right now, other than Apple, of course. Bank America, BAC, stock's 26.25. They buy the at the money or just in the money 26 calls all the way out in October. So not just next week expiration August, not just September, but October. So 2 expirations and a week into the future. This one gives you a lot of time. They paid about $1.75 for these. So they also sold the 29s against it. What does that tell me? Tells me the person doing this is pretty smart, because basically they put in the neighborhood of $1.10 on the table instead of $1.76. Why is that? You pay $1.75, you collect 64 cents, you get it. You paid about $1.10 net for the position. So I think that's worth noting for you. I like it. Stock has retraced after being up through 27.80, has retraced all the way back down to 26.20. I like the opportunity to get in on a day when the market's down and I have a limited risk trade. Bang. Third of our 3 at 3 coming up. Builder. Okay, BLDR was my final trade. The stock was 31.25. During the show, I saw this. We saw those SEP 32s just out of the money's trading. I decided, okay, I'm going to buy a spread in here. I bought a spread in here. I'll be in this probably for about a month. And BLDR, as you see, Builder's FirstSource, jumping just over the last couple days. You see it last Friday, August 7th, when it was $26 stock. Now it's moved up by $5, and I like that gap higher as well. I am in this one, and like I say, I'm in a call spread like the kind I described earlier for you. So if you'd like to learn more about what we do at Market Rebellion in the way of unusual option activity, come on over, check it out. marketrebellion.com/UOA. That is marketrebellion.com/UOA for unusual option activity. Thank you very much for joining me today, folks. I hope it was informative and entertaining, and I look forward to being back with you tomorrow. Have a great evening. I'll see you in the workout videos in the morning. Bang!